Hi, this is Randy Finney with Right Side of the Chart, and this is a market update for Friday, November 9th, 2018. Didn't do an update, at least not a closing market wrap yesterday, because we didn't really have any significant technical developments. It was more of a consolidation day after Wednesday's big move, which is very normal. You had, the Nasdaq 100 was up over 3%, SPY was up over 2%. So when you get those big days like that, usually, unless it's, the charts have really priced in some type of powerful breakout pattern, or chart pattern that was a catalyst for it, you usually get a day of where the market consolidates. And although we were down, that's what it was. But I wanted to point out a few things. This is S&P 500 E-mini futures, same charts I posted on the site back on Wednesday, or was it Tuesday? Tuesday, I believe, and again today. And what I've been tracking here are these mainly these uptrend lines right here. This is again a 60-minute chart of ES. ES paints a better picture of what's going on than does SPY. So even if you're trading SPY, I think it's good to keep an eye on the futures because you have the virtual round-the-clock trades where you don't have that on SPY, and therefore you can't pick up all the reactions to figure out identify a well-defined trend line. So that's why I like to use the futures here. And so you had a trend line here, which has just been violated today briefly, but I talk about this a lot. When I have in this case, we'll use this example, an uptrend line, but then just below that, a decent support level, you have to give the benefit of the doubt to the last two to breaks. So far, we came down, kissed that 2783 level, almost to the button. I'd have to zoom in here really tight, but you can see, and we bounced a little bit. I'm looking at intraday charts on another screen. So, and I did post these this morning, an update on it saying that we were on those lines, and I'd expect a reaction off. It's the first tag since back here. That was, let me grab the crosshairs I listed on the site. That was the 6th. So that was, I think, is that Tuesday? Yes, Tuesday. So we haven't visited these trend lines in Tuesday, and from my experience, um, every you have a couple tags here, so we've had a few days and it's been a while, so usually you get a reaction. Now, doesn't have to happen. This thing's getting long in the tooth right now. I'm talking about this trend line. And the other thing is, there's two ways to trade a trend line. You can, if you're bullish, then a trend line is support. And as I always say, support is support until and unless broken. So those bullish thinking the market's going to go to new highs, this is your objective buying opportunity. Pull back to support, just like you had an opportunity here, and you may have here. However, in analyzing the charts, it's not always so simple. So when I see something coming up to support any type of security, a stock or the index, I have to decide, um, do the charts indicate it will likely bounce off that support level? If so, I look to position long on a pullback to support. Do the charts clearly indicate that that trend line will break sooner than later? In which case, I hold off and wait for a break to position for a short trade, or is it indeterminable? In other words, if I can't make a case either way, then I either step back, or if the trend is up, the safe bet is go long at that support level with a stop just below, somewhat below. And I talked about this, in the volatile market, you're going to undercut these levels. So here we are right now. As I'm doing this video, we're dancing on that level, and what indicates to me, and I've made this clear since posting this the other day, I do expect these levels to go. It's the negative divergences. We have these 60-minute divergences, simple yet effective. Swing trade these 60-minute divergent lows like we did here. There's a divergent low. It told us to get out of our shorts. The risk reward started to move over to the long side. We broke out of the golden trend lines, if you recall. That's the golden downtrend line. Actually, I was highlighting it here on the 15-minute chart of SPY. And so either way, you had two breakouts there. Now, at this point, I'm looking for a breakdown there. So there's my targets for you ES traders. That's what I call my minimum initial target. So once we see 2783, maybe a hair below that, once that goes with conviction, as well as NQ, which I'll get to in a second. I track these two indexes. Um, and I want to see both break down. There's other indexes out there, but the Dow's only 30 stocks. So I like to use the S&P 500 and the Nasdaq 100, which is my preferred trading proxy. The other thing to note here, I don't have a dotted line there. Usually, this is a PPO. Usually, there's a dotted line at the zero level. During a sideways market, trend indicators like the PPO don't do you much good. They slice around. But when you have these clear moves below and above the zero line, like right here, that told you the trend was bearish right there. bullish trend. And again, on this time frame, it's a 60-minute time frame. It's a daily chart. You have longer term trend indicators indicating longer term trends. So for the most part, other than this little whipsaw here, the trend has been bullish since this point, since the PPO line. I like to use the last of the two, which is the signal line there. It has told us the trend was bullish, but now it's in jeopardy of crossing back down. And we're coming off high levels, just like we were right here. We had a sharp counter trend rally. This is something else I want to point out. Let me go to a daily chart here real quick and show you something. Okay, this is a long-term chart, a daily chart going back all the way to early 2016. And these are the NASDAQ 100 futures, the E-mini futures. Now this will look, of course, they're the futures for the NASDAQ 100, so same thing here on the NDX index. But these are the futures. There's that beautiful, well-defined, super well-defined trend line, the breakdown, the back test, everything that's kept me bearish. Looking, obviously sidestepping, expecting a counter trend bounce here, but still expecting another thrust down. Like I say, anything's possible. If it goes the other way, fine. But looking for another leg down, and if we get it, then I think it'll be pretty swift like this one here. Now, so you can see we have a breakdown and a back test, and although I can play around with this line, I can drag it a little bit here or there, kind of come in and capture these candles a little higher. I still think that if this scenario, which remains my preferred scenario, that this is a kickback rally and we may come back test this line, the upside is limited right now. And so I think, 2 days ago we shorted QQQ again for the first time as an official trade since we closed that last trade out here on the day of the lows. So we closed the last QQQ short out there. We're short again. So far, so good. I saw, there's potential for a little bit of upside. And that's the thing. I think it was a great short entry because if I'm wrong on my whole scenario, then I would have been wrong within just a few percentage points. Things would have started really chipping away at the bearish case if we went much higher. So I think it was like I said, a trade that was certainly a counter trend trade and as such was somewhat aggressive and still is. I mean, we've got a lot of work to do to firm up the case because my targets are pretty far south, pretty far down below. If I'm not sure yet if I'm going to post this video publicly on the YouTube channel or keep it private. I'm going to go over a couple other things here and then I'll decide if this will be a members only video. But I wanted to show you one other thing here real quick. This is a daily chart, so let's zoom down here. Now this speaks to what happened on Wednesday here. We had this big green candle, one of the biggest up days in years. And there are sentiment polls out there, AAII, some other ones I look at, but I also look at what's going on in the trading room, and I know a lot of traders, came extremely bullish since then or still. And hey, maybe you're right. One thing I love about the trading room is I know I'm not always going to be right. I'm going to be wrong. That's the only guarantee I will give anybody with trading or my analysis. That's the only guarantee in the market that I will be wrong, as will anybody else. So. There's some traders that, sometimes point things out I don't see. But overall, there's been a big spike up in at least bullish sentiment again in the trading room. And I know that's not completely representative of the entire, all the players in the financial market. But what I wanted to get at here is, to me, this was just another, run-of-the-mill move. We've had, as I pointed out that day, I believe, a lot of big rips and dips, and we've had some, quite a few drops that were even larger than the I think it was 3.19 or so percent gain in QQQ. But I wanted to point this out real quick. Remember this initial leg down, and everybody wanted to get super bearish here, although that's when I was looking for a counter trend bounce. And we had then this big green candle, and oh boy, the bulls came out of the woodwork and were so charged. That big green candle almost mirrors this one. And so far, you see what happened. If you went bullish or long after that big green candle, the first day was a consolidation day, just like yesterday. That's why I didn't do an update yesterday. There was really not much technically to report. We went nowhere. The markets were down, but again, relatively speaking to the moves, and they didn't violate any trend lines or support levels, other than I was 1 minute chart. But I don't want to digress. I posted some levels on a 1 minute chart. But so far, that's what happened there. Little consolidation day, and then the selling resumed. So if we're at where I think we are, it's still too early to say. But you can see so far a similar consolidation day and more downside What I want to see happen to really help firm up the bearish case, I want to see, yes, Wednesday's big green candle wiped out. That to me would be quite bearish. Just like a lot of bulls and longs got charged here, dip buyers stepped in, and most of them weren't buying here. They weren't buying here. They probably wanted to start getting long about there when they saw how strong the day was, and oh, breadth is so good, and volume and all this other stuff. And again, that was a knife through the hearts. They get start going down, and then their stops start getting hit along the way, and that gives you that waterfall sell-off once they realize they're wrong. Um, Again, this is a scenario, and I may be the one proved wrong, but again, I liked our entry that we had on Wednesday, shorting up there because the downside's minimal. If we start going up much higher, soon at least, we're going to take out this down, take back that long-term uptrend line right there. Especially if we get a solid close above it, we're going to take back the 200 days. I want to get to that in a minute here. We jumped above the 200-day moving averages on Wednesday. And, I had to acknowledge that on face value, it's bullish. But again, I've talked about this a lot with this recent volatility, the big back and forth days. It's almost the norm that you're going to overshoot support and resistance levels. So there it is. And, I continue to view the trading in the last couple months like a fight between two big heavyweight sluggers, just exchanging blows. Bears take one round, bulls take the next. Bulls took this round the other day. What the bears need to do, and I'm speaking metaphorically, I'm an agnostic when it comes to markets, bull or bear, I just trade in the charts. And, if my positioning short, I'm going to refer to myself as a bear or bearish at time. But as far as a bearish case, let's see if they can wipe that candle out again. That candle from Wednesday, meaning move down, not just to the bottom, but below it. And I think if that happens, I think we'll see something similar here. We'll start to move down, we'll move down, test the bottom of it. That's what they did there for a few days. Tried to save it again, and then boom, gave up the ghost. Actually, right here, that day they parked it right back up there. But once it gave way clearly, then the floodgates open, the stops get hit, so longs start getting back out of their positions. They stop buying dips, shorts get emboldened, they jump in, and that's that. We'll see what happens, and if it goes the other way, I can tell you right now, there's still work to be done on the upside. Even if we popped above yesterday's highs, I can say that would be certainly bullish in the near term because it will help foil this, scenario of fading this candle, but there's still a lot of overhead resistance levels, as I talked about on QQQ and SPY. Okay, so just back to these 60-minute future, the charts of the futures here. This was ES, the one we started out on. So again, we're cracking below that trend line. We can zoom it in for you a little bit and show you that a little clearer. Flirting with this horizontal support level. It's an important level. So that to me is a level to watch today. We already had the divergence. You're seeing the PPO start to move down back into bearish territory below that zero line. If it's bullish, you'll usually see the PPO turn back up here. And by the way, the PPO is very similar to the MACD. If you only have a MACD on your chart, put it up. It'll look almost identical here on this time frame. And there's another case. Look back then, if you recall that rally I just referred to, we had that kickback rally after the selling started in early October where everything looked great and bullish, big, huge move up comparable to the one we had the other day. But you can see after that, once it was faded, the PPO fell back down below the zero line. And it was doing so after it had moved up from high levels, just like right here. So let's watch that. We had something similar here, and it did dip back down below. Maybe this is the real deal, maybe not. And again, I put a lower weighting on where the PPO is, a much lower weighting, I can tell you right now, than I do on trend line and price support. So let's see what happens. Most importantly, we had this divergent high recently, and those divergences are playing out. And if they play out, you can see I have us coming down here to before any major reaction. There's some minor support in between, but I think 2750, that's 2750.61 that line's at. So give or take, we'll call it 2750 or 2751. That would be my first target. But remember, the charts are somewhat stacked. So if we do go down to 2751, what does that do for that candle? Let's take a look back at that. Actually, I'm thinking out loud here as I do this. So we had that daily candle, and I said 2751. There's a big green candle right there. So no, it wouldn't take us all the way back down below there. The very bottom of that candle, at least in the futures. We'll have to look at QQQ. That's probably a little bit more important if we take it out in QQQ because the majority of market participants are using QQQ, not futures. So let's look at that. Okay, here's QQQ on a daily chart. Let's just zoom in real quick. Yeah, we're almost there. We've almost wiped out that candle right there. Remember, we gapped up too, so the real pain would come if we backfill that gap. So that would be, all the way down here. We can look at it on a 60-minute chart, probably have a little more clarity. This is similar. See the uptrend line I have? Well, yeah, we're also on the Qs, at least we're at that uptrend line. There's the rising wedge. You don't see the divergence here that you did on the 60-minute chart of the futures. But either way, it's the same story as what I was just showing you on the futures. We are at pretty decent support. You can see I have a support level at 172.50. It's not an arbitrary number. There's the top of the gap right there. There's a big gap. So we're testing the top of that gap now. That's always a significant support level, the top and bottom of gaps. We have a reaction high there, a reaction high there. We have a big gap right there. Plenty of reaction lows there that we're dancing on that level, plenty of reaction lows there. So this is a pretty big number. We're at a battleground right now, and that's why I'm doing this video. Bulls need to step up and run this thing up and take us above the recent highs, keep moving up. I still think 178, so that give or take 178ish area is a brick wall if we get there. But at this point, I'm leaning towards that we don't. That the highs that we saw the other day were the highs. The market likes to trap people. That's one thing I know about it. It likes to trap longs. If it's going to move down, it's going to do so stealthily, and that's why I shorted QQQ on Wednesday. It looked like things couldn't have looked more bullish, and the sentiment was bullish. So that's why I figured that's where I wanted to put it on. I had debated waiting to see a reversal, waiting for evidence, but that would have cost us, a pretty penny so far on our entry price. And I did list that as an alternative entry, by the way. If you didn't, I know a lot of people don't like taking counter trend trades. Most people, it's against their nature. They want to buy on a day like Wednesday, not sell, and certainly not short. You just have to, sometimes take that mindset. And again, it all sticks into the longer term trading plan. It wasn't just an arbitrary move. I had mentioned weeks ago, after covering shorts and reducing short exposure, I listed my scale in short zone or my expected bounce target zone, and we're well within it, or we're on Wednesday. So therefore, I'm stuck with my trading plan. So far, so good. So there it is. There's your levels to watch. 172.50. We're below it now. Again, intraday, we're going to swing around. There's volatility, but if we close below there, especially if we start selling off impulsively, you still have the bottom of that gap to contend with right here, and that's about 170, a little over 170. And then again, I think the selling as we start to take, if we can fade all of Wednesday's gains and even take out Tuesday's highs, you'll start to see the selling accelerate and then open the door for that next flush out move down that I was talking about. And then at that point, we'll cover up shorts again and start to look to go long. And if the opposite happens, I'm still keeping things light as far as, I'll trade ideas. If the opposite happens, again, we don't have a lot of exposure right now because the near term, it's starting to clear up a little bit to the downside. But like I said, a little more work to be done. And then I may add some additional official short trades on the site. And I'll certainly share some things that I see in the trading room as well, whether they're official or unofficial trades. And for you SPY traders, here's SPY. Remember, I started out with the S&P 500 E-mini futures, but there's what you're looking at on the 60-minute chart of SPY. Here's your uptrend line, similar to the one I just showed you before. There's your gap. You have the gap from Wednesday. Top of the gap, which SPY is coming up on now, hasn't yet hit it. I'll move this. Well, I'll just add another line for you there. There's the top of the gap. Here's the bottom, about 275. So if both QQQ and SPY enter the gap from above, chances are they'll come in and make a backfill, and that backfill would be about 275 on SPY. Again, we have a bearish crossover here on the 60-minute PPO, and sometimes again you can focus on the intraday charts for timing and entries and get some clues, but I'm still working off my bigger picture again that's formulated from what's happened recently on the weekly charts and daily charts. Nothing's changed there to reverse that what I call significant technical damage done. So as of now, sometimes you just got to hold your nose, take the plunge, jump in, and that's what we're doing with the shorts right now on the QQ. SPY on the daily chart. As I mentioned, also another thing on Wednesday. I'm sorry, Wednesday's big rally. We popped this level, which was resistance, but it would I had also mentioned we stopped cold at that previous reaction high, which is a significant level. That's where we had after the initial sharp sell-off in October, we had that kickback rally. There's that big green candles that started, getting the dip buyers charged and energized again. And there was that knife through the heart when that big green candle was faded. You had that other leg down. So far, that's where this rally failed, right exactly where the last one failed, and that has to keep the longs and the bulls guessing. Now, there's still work to be done, and ideally, let's backfill this gap and then some, and I think that will really, really put a knife in the heart of the bulls. Someone, as I'm looking at this, and I'll probably get a comment. I haven't seen any yet. Maybe somebody's posted anything. Someone might say, "Randy, do you see the inverse head and shoulders pattern forming on the SPY?" It's just popped out right now as I'm looking at it. Yes, but no. Inverse head and I get this a lot. Inverse head and shoulders pattern. I'm sorry. Inverse head and shoulders bottoming patterns are exactly that. They're bottoming patterns. They come after a prolonged downtrend, i.e., a bear market or a correction. Not a correction like this. Not on this daily time frame. This pattern here would come after something like we'd have to go to a long-term chart here. Well, we've been in a bull market, so I'm just trying to tell you this is coming at the top of an extended uptrend, and it would not, in my opinion, fit the criteria for an inverse head and shoulders bottoming pattern. You can get a head and shoulders topping pattern after a prolonged uptrend like this, but so I just wanted to mention that if we get another thrust down, I'm sure people will start to see it and talk about the potential IHS. Hey, anything's possible. I've seen IHS patterns, inverse head and shoulders, used as continuation patterns, used as topping patterns. In this case, it would be a continuation pattern because it would be a continuation of this big uptrend. But I just want to let you know that I'm not putting much of any of a weighting in that right now. So just to conclude my thoughts here, and we'll keep this video only on the equity markets. I'm not going to go and I'll cover with members some other developments I'm looking at in junk bonds, energy stocks, crude oil, stuff like that. But to just conclude this, my primary scenario remains this, that these divergences here will likely be extended, that the market will come in, soon take another leg down, undercut the recent lows. And that's where we'll look to begin reversing back from a short to long exposure again. We don't always get what we want, but I would love to see this. It would just mesh well with everything I've been talking about, really since before the highs here, that we come in before year's end to test those earlier lows, probably undercut them slightly, maybe reverse around there. It doesn't matter as long as we have these divergences in place. That would set us up for a nice reversal and then rally maybe into the beginning of the year. But we'll see. The charts are dynamic, and so is my analysis. So even if I'm right that we take another leg down, that doesn't mean I'm going to be right at this point, or I'll still be holding this scenario. I'll have to just see how the charts develop if and when we get there. And of course, if I'm wrong scenario and we start going up a lot higher, like I said, there's pretty significant resistance ahead. Then I'll have to change my tune and my positioning. But as of now, that's what I'm looking at. And on QQQ, the way that looks, go to this board here. I think I have another board for you. Here's a clean board. We'll just draw it out this way. So there's a back test of a trend line there. And that's where we failed the other day. We also failed at the 50-day moving average. If you can make out this yellow line right here, it's done a pretty good job. You see the 50-day has capped a lot of pullbacks here, capped it there, capped all these. And then we broke the 50-day right here. If you can't make it out on the YouTube video, let me do this for you. Let me turn that line up. There it is. So there's a 50-day, which we failed at again on Wednesday's rally, as well as back testing this trend line right here. I have a couple different variations on the uptrend lines. This is just one of them, and that's it. So the primary or my preferred scenario remains this. One more jog down like that. Undercut, probably undercut. Maybe we fall a little shy. Sometimes you fall a little shy in reverse. Sometimes you reverse right on the previous reaction low. Sometimes you come under. But so that's a pretty tight range. This is roughly where I think we're going to head here. And if I'm right, and you're long and you're bullish and you don't need this. The good news, and I said this before, I think it'll be pretty swift. That's what tends to happen. If all these recent bullish developments, the regaining of the 200-day. Oh yeah, and I wanted to talk about that too. I know I told you I'd wrap this video up. I put a pretty heavy weighting on the 200 days. They're not the be all end all. And again, why Tuesday's or Wednesday's big rally up was bullish. It both SPY and QQQ took out. That's the red line there, the 200-day moving average. So the bulls want to see that held. I expected it to be fleeting and a false breakout, but here we are. So again, today, go back to the beginning of the video, everything I've said, we're at pretty significant levels. We're at support levels on the intraday charts, 60-minute charts. You have daily support here. So what will happen if I am correct? We're going to move back down below the 200-day. Those support levels will break on the 60-minute charts. And again, that'll be a knife through the heart of the bulls because that is a failed breakout. And as I often say, fewer things in trading are more bearish than a failed long side breakout. Works the same in reverse. We call that a bull trap. Bulls got sucked in there buying that long, shorts squeezed out, and I had no doubt that a lot of shorts were squeezed out on Wednesday, and that's actually a very good thing for the bears or those short now, because if you have too much short interest in the market or in a particular stock, it puts somewhat of a floor in there because the shorts are the only natural buyers. They have to cover. You cannot stay short a position forever. You're going to be carrying an interest cost from your margin. You have to cover. So if you had a lot of shorts and we dip down, let's say here, they'd probably be covering. But when you clear out short interest, it's usually opens the door for those swift moves down. And again, that kind of all plays into, the longer term scenario that I've been laying out here for a while. So we'll see what happens. And I'll do another update if anything significant happens today. But as of now, look at those near term levels I'm watching. Look at the 200-day, look at a fade of Wednesday's gaps, all those other things. And I'll say this too. It's probably if we get those signs, it's probably not too late to add short exposure. I'm sorry. Ideal was up here the other day, but if we are going down another, seven. Actually, where are we at now? If we're going down another 8, 9, 10% from where we are right now, and we drop another, 2% or so, that's going to certainly sharply increase the odds that my scenario will play out. If we can take out the gaps, take out the 200-day and all that, it doesn't guarantee it. There's still a lot of support on the way down as well, but it does increase the odds, I think, of getting that additional downside. So while, again, it's not the most objective time, that's why I like to, take a little short here. I can always add to those positions as I have profits embedded. So if we do get caught in a sudden reversal and, I shorted some here, then my average cost is still pretty good. And I can actually lower stops at this point. May do so on the official trade if it starts to play out. We may lower stops to break even soon. All right, I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.